in order to get to the lecture, I think I've got the answers up here. Did I put those up? If I didn't, I will post them for you. It was these, right? Yes. So I tell you what, I'll go ahead and post the answers for you. I think we had some pretty good practice in last week on that. So I don't know that we need to spend a whole lot of time going through that. Because what I want to do today, so we're going to talk about, okay, so we've got the calculations down. We didn't really do yet any calculations on an individual pay period. We did it over a year, an annual pay period. So let me go through a little bit. I want to see if, I don't know if we have any examples in the, actually, let's do this. I want to go through like a per pay period example or two with you, what it would look like on an individual pay period. So I am going to pull up one of these, but I'm going to do it a little bit differently. Where is the view? No, that's not what I want. Okay. Oh, Word. I have such issues with you. Nope, it doesn't want to do it. Come on. Layout. I want the view. Nope. Does anybody know how I can get this just down to one? Is it down here? Let's see. Under file? Read mode? Oh, that's close enough. I just want it so you can see it, so you can actually, let's see if we can make it any bigger. Oh, that's way big. Let's see. Okay. And, okay, so let's say, let's look at John. So John's annual salary is $170,000 a year. Actually, let's not take John. Let's take Mary. Mary's $50,000 a year. Let's say that she has, she's paid semi-monthly, which means how many pays per year? 24, right. So we got 24 pays. So how do we figure out per pay what she's making? We're going to, per pay, how would we do the calculation? Right, so we'll divide that by 24. So we get to, and I'm sure some of you can do this in your head, but. So 208333 per pay is what she's making. So in order to calculate the Social Security and Medicare tax, we would simply do the 208333 for Social Security. What's the tax rate? 6.2. And then 1.45 for Medicare. So we would subtract those amounts. $129.17 for Social Security tax would be withheld. 3021. So pretend she doesn't have any income taxes. Okay, her net pay, what she's actually going to take home, we would subtract then those amounts. 20 minus 3021. So 1923.95. So this is the amount that her check would be in that pay period. Okay. The same thing for everybody else. John might be a little bit more challenging when we get to that pay period where he reaches the 160,200. So let's figure out what pay period he reaches that. So John, let's also say, well, let's say biweekly. So 170, and he's biweekly. Yeah. Must be a manager or something. So how many pays is that? Biweekly? 26, yep. All right. So 170,000. Do you guys remember how to do the calculation to figure out which pay period he's reaching that? Yeah? Do you remember what the calculation was? How do we know which pay period? Right, so we're going to take the 170, right, divided by 26 is how much? $38.38. Okay, 65.38.46. And then to determine the pay period when he reaches the 160,200, remember we're going to take the 160,200 divided by 65.38.46. So all right, so in the 25th pay period, that's when he's reaching 160,200. Okay, so what I want to do is tell you exactly, let's do the calculation to in that 25th pay period. Okay, so as of the 24th pay period, he would have made, so up to the 24th pay period, he would have made 65.38.46, 156, so 923.04. This would be year to date up to the 24th pay period, 65.38.46. And then in this pay period, he's earning another 65.38.46. Some of that is going to be subject to Social Security tax. Some of it is not, right? Because we get to, with the 65.38.46, we start to exceed that 160,200. So let's do the calculation of what that tax is going to be. Do you remember I've got the instructions up here on how to do that calculation. Steps to calculate current period FICA. All right, so prior period year-to-date salary up to the current pay, so this is what we did, the 156,923.04. So wage base minus the prior period year-to-date salary. So 160,200 minus 156,923.04. $3276.96. All All right, so result is 0 or negative. There's no OASDI. It's not 0 or negative. Continue to step 3. Calculate the current pay period OASDI tax liability. Multiply the rate by the smaller of the result in step 2, which was, let's see, this here, or the current period total wages. Well, it's going to be this amount. So the 3276, so the Social Security tax is going to be applied. This is going to be our wage base for this period, Social Security tax. His total wages are still this. His Medicare tax is going to be based on that. That's his wage base for Medicare tax. But for Social Security tax, this is going to be his wage base. So gross pay or total pay, 65, 38, 40. For Social Security purposes, we're going to take this times 6.2%. This gets us our Social Security tax. .96. 203.17. So for Social Security taxes, we're going to withhold 203.17. For Medicare, we're going to take this whole amount times 1.45%. All right. So 65, 38, 46 times 0.0145, 94.81. That's how much we're going to withhold for Medicare tax. So his net, again, in this magical land where there's no income tax to withhold, minus 203.17 minus 94.81. So his net pay then is going to be 62.40.42. Okay, on a per pay basis. That's during the pay period when he reaches that $160,200. Okay, questions about on a per pay basis, how that's calculated? Because what happens is, the reason I want to lead with that is because what happens for employers is they're withholding these amounts. They're also setting aside equal amounts that they have to pay. And then during certain periods, certain frequencies during the year, they have to make those deposits. They have to then deposit those amounts that they have withheld. Okay, that's what we're going to talk about here next. What happens at that point? So for each of this is just one employee. So for each pay period, remember that payroll register is going to show the amounts withheld for all of the employees. So for that payroll then, the employer is going to have to eventually deposit those funds to the IRS and then also file reports with the IRS on how much has been withheld. So that's what we're going to discuss here. After the calculations, after each pay period gets totaled up for all the employees, and then those amounts will have to be remitted to the IRS. And the schedule for that differs depending upon how much in total has been withheld by employers. So let's go through what some of those requirements are. Got to get back to my PowerPoints here. That's not the right one. That's last year's. What am I doing? Don't pay attention to that one. Hopefully these are right. There we go. Okay, so we went through We talked about when somebody's an independent contractor as well. We went through those. Yeah, I remember doing this. So, yeah. Okay. So there are a couple of forms that we'll just kind of mention here. One is called an SS4 form. That is the form that employers fill out to obtain an employer identification number. Remember, every employer has an employer identification number. If they're paying employees, most of them have an employer identification number anyway. It acts like the Social Security number for the business. Okay, the form that's filled out in order to obtain an EIN is called an SS4 form. It's super simple. It's like 1.5 pages long, and it can be filed online at the IRS, and an EIN is generated immediately. So it's really not something that it's not that big a deal for employers to have to obtain that EIN. They do, however, have to know what their business organization is going to be. Are they a sole proprietorship? Are they a corporation? Are they a partnership? Are they an S corporation? Whatever choice of business entity that they have chosen, they do have to establish that first, because that is one of the questions on the SS4 form. So the SS4, again, and I can show you kind of what the form looks like real quick here. And like I said, you can fill it out. There's a PDF version, but there's also an online version of this where you just fill out all the information right then and there. So just information then about the business up here. This is the name of the responsible party. So if it maybe it's the owner or whoever's in charge, their Social Security number, address. Here's where they have to choose what type of entity. Sole proprietor, partnership, corporation, personal service corporation, church group, other nonprofit. So there's lots of different choices there for the type of organization that it might be. If it's a corp, where is it incorporated? In what state? Every state has to be incorporated in a state. So that information is there. Why are you applying for this EIN? You started a new business. You hired employees. You need it for the bank. A lot of times a bank, in order to open a business account, they may require a employer ID number, different types of, if you purchased another business, that sort of thing. And then some specific information about what type of business you are, in what area are you doing business. If you sell merchandise, what kind of merchandise do you sell? Have you ever applied for an EIN before for this entity? Yes or no? If so, they want to know that. If somebody else is filling this out, or you want to give permission for somebody else to talk to the IRS on your behalf, you fill that out. And actually, it's only 1 page now. It used to be a little bit more than that. And then a signature. So it's just 1 page long. Those questions, pretty simple. Like I said, there's an online option for it, so you don't have to fill this out and print it out. And then it pops out with your brand new EIN that you can use immediately at that point. So that's what an SS4 form is for. An SS5, this would be something that if you had an employee who didn't have a Social Security number. I'm trying to think of a situation where you'd have an employee in that situation. They should already, if they were on temporary status, that sort of thing, they need a Social Security number. The SS5 form is the application to get a Social Security number. So also, there is a verification service that employers can use in order to verify that the Social Security, that the name on the Social Security card matches the number and all of that. Of course, that wouldn't be fail-safe, but employers do have the option to do that. So why would we need these Employees need a social security number in order for employers to properly file the required reports on behalf of the employee. So the W-2, as well as certain state reports that will be required. The employer needs the EIN in order to file the required reports on behalf of the employer. One of those reports, the main one that we're really interested in, especially right now, is called the 941 form. So a 941 form, the IRS loves their numbers. They love their schedule numbers and their schedule letters, and they love all of their abbreviations. So this fits right in. The Form 941 is the employer's quarterly federal tax return. So it's right in the name, quarterly. It's done 4 times a year. It has to be filled out once each quarter. These are the due dates for each of the reports. January 31st is the first due date. That's for last year's, the last quarter. April 30th, that's for the first quarter of the year. So January through March is due April 30th. June is due July 31st. July through September is due October 31st. And this chair is in the way. October through December, January 31st. These are the due dates for the 941. So all payroll that occurred between January and March, that's going to be reported on the 941 that is filed by April 30th. So you can see it's due the last day of the month following the end of the quarter, right? So these are, now you want to make sure that you get the distinction between the filing dates for this report and the deposit dates for the money, because they're different. The IRS wants the money a lot sooner than this. They want their money as soon as possible. They're just like the rest of us, right? Somebody owes, they perceive that somebody owes them money. They want it as quickly as possible. But these are just the due dates for filing the actual report. As with every due date for the IRS, this is universal. If the due date is on a weekend or a holiday, then it's due on the next business day. So if April 30th happens to be Saturday, it won't be due until May 2nd, because that'll be the next business day. Okay? Does that make sense? So and oftentimes you'll see like the April 15th deadline isn't always April 15th. Sometimes it's the 16th or the 17th. It's for the same reason. Because if April 15th, that's the individual tax filing deadline. If April 15th falls on a weekend, then it's going to be due the next business day. Okay? So that's the same thing here. If it's on a weekend or a holiday, the next business day is the due date for the return. All right, so there are special rules for employers who owe $1,000 or less. They get to, and this is for the whole year, $1,000 or less, that's combined. That $1,000 is the employer's portion, the employee's portion, as well as any federal income taxes that have been withheld. So it's really a small number. But those very small employers who owe less than $1,000 get to file a different type of form called a 944, and they only have to do it once a year. Everybody else has to file it on a quarterly basis, and they have to file this Form 941. There aren't very many businesses that file the 944 because it is such a small threshold, that it doesn't, most businesses owe plenty more than the $1,000 for the entire year. okay? There's another type of form called, and this is just kind of FYI, we're not going to work with this one, but Form 945. This is to record any federal income tax that has been withheld for non-payroll type items. So if you have federal income taxes withheld on interest income or on dividend income or on pension income, retirees on their pension income, then the person that is making the payments files this Form 945. Again, we're not going to work with that. There are all different types of this kind of classification of form. What we're really concerned with right now is this 941, and that's what we're going to be working with, because that's the form that reports the Social Security and Medicare taxes that have been withheld. It also reports the Social Security and Medicare taxes that the employer owes, and it reports income taxes that have been withheld, federal income taxes that have been withheld. Okay. So these are the due dates. This is what I want you to kind of solidify mainly from that is this 941, and we'll go through and look at the 941 and we'll show you how to fill it out. But these are the due dates, the quarters when those reports are due. All right. Questions about the report itself or the due dates? I'm sorry? 944, that would be due January 31st. Yep, January 31st. Yep. If it's an annual report, if it's only due one time a year, it's going to be January 31st for the previous January to December. So they give you a month to prepare it, essentially. Okay. And these are the postmark dates. So if you're mailing it in, this is when the IRS would want to see that it was put in the mail, because that's really the only date that's provable is when you actually posted it. All right, so these are the dates, again, for the 941. Now, this gets a little bit more complicated, the deposit dates. When are we going to actually deposit that money that we've withheld? Well, it's the standard tax answer, which is it depends. That's the answer for every tax question that anybody ever asks you is it depends. Okay, or you can remember that. It depends. All right, so so far we've only looked at calculating the FICA taxes, right? Social Security and Medicare taxes. But the deposit that is made is not only the FICA taxes, it's also the income taxes that have been withheld. When we get to Chapter 4, we're going to do the calculations of income taxes to be withheld. But just know that on that, when you make that deposit, you are going to combine all of those taxes together that have been withheld, and you're going to make that deposit. So there are actually like 4 different deposit schedules, but a couple of them are more common than others. The 2 most common ones are a monthly deposit schedule and what's called a semi-weekly deposit schedule. So monthly is just that. You make the deposit every month. So we're in, this is March right now. If all of the payroll that we generate during the month of March, all of the amounts that are withheld during the month of March, FICA taxes and income taxes, all of that then is going to be deposited next month by April 15th if we are a monthly scheduled depositor. Okay, that's pretty easy. It's not the 30th though. You notice you've got a whole month to prepare the report, but you've only got 15 days to make that deposit. They want the money a lot quicker than they need the report. So monthly scheduled depositor, everything is deposited by the 15th of the following month. So if I'm a monthly scheduled depositor, for the month of July, when would I deposit my FICA and income taxes? If it's July, so for the month of July, deposit date What's the deposit date? What's the 15th of the month following July? What month comes after July? August. What's the 15th of the month that comes after July? So August 15th. So January, when would I deposit it? This is if I'm a monthly depositor. So February 15th. Okay, August, September 15th. December, January 15th. Exactly. That's my schedule if I'm a monthly scheduled depositor. That's pretty easy, right? Fairly easy to remember. Every new business starts out as a monthly scheduled depositor, okay? The IRS tells you how often you have to deposit your taxes, but they tell you based on your history of what taxes you've generated. So if you're a brand new business, you don't have any history, right? So everybody starts out as a monthly depositor. Then what the IRS does is in November of every year, they look back at what happened from July 1st, the previous year, to June 30th of that year, based on how much in total the taxes were. Then they tell you whether you're still a monthly depositor or whether now you are what's called a semi-weekly depositor. So a semi-weekly depositor, this gets a little bit more complicated because the name of it is a little misleading. It sounds like semi-weekly, like you're going to deposit twice a week. That's what it sounds like. That's not what it is. That means semi-weekly means that the IRS accepts deposits on 2 days during the week. And when you pay your employee will determine which of those 2 days you have to make your deposit. Okay, so for a semi-weekly depositor, it's not a particular date. It's dependent on when you have your payday. So it could vary. If you're on a bi-weekly pay cycle, that means that your deposit schedule is going to be pretty routine because let's say you pay your employees every other Friday. Well, your payday is always on a Friday. So the day that you make your deposit is always going to be the same day. But if you're a semi-monthly depositor, some months you're going to pay on a Tuesday and a Friday, or a Wednesday and a Monday. It's going to vary. And so that means that your deposit day is also going to vary. So semi-weekly, if the payday is Wednesday, Thursday, or Friday, Wednesday, Thursday, or Friday, then deposit is due on the following Wednesday. So today is Monday. It's not one of those days. We'll look at Monday. So if the payday is on Saturday, Sunday, Monday, or Tuesday, then the deposit is going to be due that Friday. So if we paid today, Monday, we would have to deposit the taxes that have been withheld by Friday. So we only have a few days to make that deposit. Now, the distinction, how does the IRS determine whether we're monthly or whether we're semi-weekly? I told you about that. They call it the look back period. They look at the taxes that were paid from, this is our look back. We look at the taxes that were paid from July 1 through June 30th. If they are greater than, well, actually, let me do less than first. Less than the total less than $50,000, then we are a monthly depositor. If it's more than $50,000, then we are a semi-weekly depositor. So $50,000 is the cutoff. They look and see, they look back. So right now, March 2025, for businesses, they're in the middle of a look-back period that by November, they're going to be informed of what their deposit frequency is in 2026. They're going to be informed of that in November of 2025. What the IRS is going to do is look back at July to June. So July of 2024 to June of 2025 in order to determine for 2026 what their frequency is of deposit. So if we have, let's just say we're a semi-weekly depositor and we have a Sunday payday. When do we have to make the deposit for that Sunday payday for all the taxes that were withheld? When do we have to deposit it? It's right up there on the board. Sunday. When do we have to deposit? If we have a Sunday payday, when's it deposited? Huh? Friday. The next Friday. Right, exactly. Be Friday. So Sunday, payday is one of these days. This is the deposit day. Payday is Wednesday, Thursday, or Friday. The following Wednesday is the deposit day. So, like I said, if you're on a biweekly pay schedule, so you pay every Friday or every other Friday, that means that you're always going to make your deposit on Wednesday, right? Because that's the deposit date. You're going to make it by the end of the business day on Wednesday. If you pay on a weekly basis and it's always on a Wednesday, then you're always going to deposit the following Wednesday, right? If, however, you are on, let's say you're on a monthly pay frequency and you pay on the 31st of every month, well, over the course of the year, the 31st is probably going to land on each of these days. So maybe if it lands on a Friday, then you're going to pay the next Wednesday. The next month, if it lands on a Sunday, then you're going to pay on Friday, the following Friday. So that's going to vary. So in a semi-monthly pay frequency and in a monthly pay frequency, this is going to vary. The day of deposit is going to vary. On a weekly schedule or on a biweekly schedule, that deposit day is always going to be the same. Now, there is another, I said there were like 4 total, but 2 main deposit schedules. These are the main ones, semi-weekly and monthly. However, for employers who owe less than $2,500, $2,500 for the quarter, they can pay on a quarterly basis. They can make their deposit with their 941. If they owe less than $2,500. If they owe less than $2,500 in this quarter and they owed less than $2,500 in the previous quarter, then they can make that deposit on a quarterly basis when they file their 941 forms. Most employers fall on one of these. Now, there is a 4th pay schedule. So we've got, what do we have? We've got quarterly. So this is less than $2,500 a quarter. And again, that's all those taxes combined. Employees, the amounts that have been withheld for FICA taxes for employees, employer's portion, and income taxes. Okay, so all of that combined. We've got quarterly, we've got monthly, we've got semi-weekly, Whoops, how to spell. And then we've got next day. Whoops, still can't spell. Whoops, I have my greater than less than wrong. Per. At any time, an employer, if at any time an employer's tax liability in a single pay period exceeds $100,000. Sounds like a lot of money, but places like DMAC, big employers, they would hit this every single pay period. If the total tax liability for withholding taxes exceeds $100,000 during a pay period, then the employer has to deposit those amounts the next day, by the end of the next business day. And it doesn't matter what normal schedule you're on. You could be on a monthly schedule. And that will happen if an employer maybe pays a bunch of bonuses at the end of the year. So if they pay a bunch of bonuses and they have to have a lot of withholding because of those bonuses, but they're normally on a monthly pay schedule, but that one pay period they exceed $100,000, then what's going to happen is they're going to have to make that deposit the next day. Then they go back to their regular schedule. Now what's going to happen is in the look back period, they're obviously going to exceed that $50,000. So their schedule is going to change next year, but it won't change yet. But those are the four. So quarterly, again, only if you owe less than $2,500 in the quarter. Actually, the smallest one is when we owe less than $1,000 for the whole year. Then we can pay that once a year with that $944. Then we've got quarterly if we owe less than $2,500 in a quarter. Then we have the monthly pay schedule if we're a brand new business, or if the IRS tells us we're a monthly scheduled depositor, then we are a monthly scheduled depositor. We are semi-monthly if the IRS tells us that we're semi-monthly. So that's kind of the nice thing. You don't have to figure it out. The business doesn't have to figure it out. The IRS is going to tell you what your schedule is. And then this next day, and this is on a per pay basis. So anytime those taxes exceed $100,000 during a pay period, you've got a next day deposit requirement for those taxes. Questions? Again, this is the deposit schedule. Most of these things I already talked about. So no deposit is required if the employment taxes are less than $2,500 for the quarter. That's kind of written funny. You still have to deposit it. You just don't have to deposit it on a monthly or semi-weekly basis. You can do it on a quarterly basis. New employers automatically monthly depositors unless they breach that $100,000 next day requirement. Then they would have to. The $100,000 is everybody has to do it if they reach that amount, regardless of what their schedule is. There are some special rules for agricultural employees. I don't really go into that. Household and domestic employees, they're paid a little. Their withholding is paid differently. It's paid on the individual income tax return of the person that's employing them. So there's a special schedule, it's called a Schedule H, that attaches to the 1040 for individuals who employ household or domestic workers. Usually you don't withhold federal income taxes from them, you just withhold the Social Security and Medicare taxes. What is this? State and government employers also have to file these Form 941s with the IRS. It's deposited through, the deposits are generally made electronically, and employers will register with the IRS to get like a access to the federal deposit system. Okay, so it's all done electronically online. I mean, in the olden days, what you would do is you would actually go and you'd go to the bank and make the deposit. The banks would receive the deposits, and so you'd go in there with all of your information and give it to the bank, and then the bank at the end of the day would make all the deposits and send them off to the Federal Reserve. Don't really do that anymore. I remember doing that though, driving down on Fridays and making that deposit. Everything is pretty much done through EFTPS now, unless, like I said, if you owe $2,500 or less per quarter, then you can send a check in with that 941. Let's see what else. So as far as the EFTPS, there are two different ways to do it. So you can do it directly, like have your own account, or you can have an account through the bank. And then the bank, it's kind of like you'll log into the bank's system, and then it transmits that way, which is kind of convenient because then they can just take it directly out of your account and all of that. But those are just two different ways to do it, but it is done electronically. Questions? That's a lot of information. The deposit, especially this is what trips most students up. The semi-weekly and the look-back period. Knowing when that look-back period is and how, what the cutoff is for each of these schedules. The reports, that schedule is pretty easy, right? Okay, fine, we do it every quarter, no problem. But the deposit schedule is a little bit more complex. All right, let's see. Let's go through all of that. Let's take a look at what the 941 looks like. Okay, so this is in your book. Just to kind of give you a rundown of what that 941 looks like. So here's where the EIN goes, right up at the top. So there's that identifying number. So we know we've got to have that. Over here to the right, you tick off which quarter it is that you're reporting for. Okay, so you can see the 4 quarters there. All of the identifying information of the business, address, name, address, all of that good stuff. Okay, line 1. Let me see if I can make this any bigger here. Because I guarantee you, you've got a homework problem with the 941, and I guarantee you this is one of the areas that students have a lot of questions on. The very first line here, they ask, how many employees did you have on a particular date during this quarter? How many people received pay on the pay period that included this particular date? So this is the first quarter. So this would be number of employees who received wages, tips, or other compensation for the period, including March 12th. So if it's first quarter, March 12th, they had 26 employees. They don't want a list of all the employees on this form. There are other forms where you do have to list all of the employees. There's state forms where you have to list them. But here they just want to know the number of employees that you had during that particular pay. Line 2, wages, tips, and other compensation. This is the total amount of wages that were subject to federal income taxes. So this is our federal taxable wages. Line 2. That means all wages that you paid that were subject to federal income taxes. Not all wages are subject to federal income taxes. There are certain exclusions from federal income taxes. If you have money withheld from a paycheck for retirement contributions, that's not going to be included. The amount that employees have withheld for that is not going to be included. If you have money withheld for health insurance premiums, that's not subject to federal income taxes, so that's not going to be included either. Okay, but line 2 are federal taxable wages. Line 3, federal taxes. So these are the taxes, income taxes, withheld during that quarter, right? So this is just the quarter, not the whole year, just the quarter. But these are the federal income taxes that were withheld from wages, tips, and other compensation. So federal income taxes that were withheld based on these wages. And again, we're going to do that calculation in chapter 4. All right. If line 4, if you didn't have any compensation that was subject to Social Security or Medicare tax, you can check here and go to the next line. So if all you did was employ your children that were under the age of 18, you wouldn't have had to have withheld any Social Security or Medicare taxes. You could click check that off. Most employers are not going to check that off. All right, so this is where we report the amount of Social Security and Medicare taxes that have been withheld. This column 1, are the wages that are subject to those taxes. Again, not necessarily all wages are going to be subject to Social Security and Medicare taxes. Health insurance. Again, if you had health insurance withheld from your paycheck, that then is not subject to Social Security or Medicare taxes. Retirement contributions actually are subject to Social Security and Medicare taxes. So if you have retirement withheld, you still have to pay Social Security and Medicare taxes on those amounts. So those are not exempt from taxes. But there are lots of different non-taxable, or I'm sorry, pre-tax benefits and non-taxable benefits that might not then be included in taxable wages for Social Security or Medicare taxes or for federal income taxes. But these numbers could be different. All 3 of these numbers could be different from each other. Also, Medicare taxes. So if we had an employee who had exceeded the Social Security wage base, $160,200, that would mean that we would have fewer wages that were subject to Social Security tax than we do wages that are subject to Medicare tax, right? So if we had an employee that had reached that threshold, that would be a reason for these 2 numbers to be different. So line 5A, we're really not going to use 1 and 2 here, sick leave wages and family leave wages. We're really not going to talk about that. Social Security tips, I don't think you have any problems that involve that, but this would be the tip income that then was subject to Social Security that had been reported by employees. So line 5, so 4 we're not really going to do. Line 5 are social 5A. Well, I guess it's all column 1 and 2. 1. All right, so this is Social Security taxable wages. And then you can see you multiply it by 12.4%. So both halves are included there. Employee portion and employer portion. And over here is the Social Security tax times the rate. So this is 5, A, B, C, and D. A through D. Has to do with Social Security. 6. No, still 5. 5E. Now we're talking about Medicare. Let's see. This is weird. 5AAA. B. Sorry. A through B. They have 3 A's. 5C. Now we've got Medicare. Taxable wages. Times the rate is our Medicare tax. Now this one is Medicare wages and tips. So up here, they've got Social Security wages and tips separated, but here they have it combined. Okay, so this would be our taxable wages and tips. And then 5D is the additional Medicare tax. So wages subject to additional Medicare times our rate is our additional Medicare tax. Okay, so get to the next page here. Too big. This is still the first page. It's a little bit confusing to have it broken up, but they've got it broken into 2. So what we're going to do here in line 5E is total all of the Social Security and Medicare taxes. Not the income taxes, but just the Social Security and Medicare taxes. So that is our line 5E. We won't do anything with line 5F. Line 6 is our total taxes before adjustments. This is the combination of our Social Security and Medicare taxes and the income taxes that have been withheld. So, this plus everything in this column combined together equals what's on here. So Social Security, Medicare tax, and income taxes. Okay? Let me pull up. You're shaking your head, Carla. Oh, honey, this is nothing. So it will,
or self-employed.
Yeah, self-employed is that. Let's see. Kind of easy. It might be easier to see if I just pull this up. Okay, so here's one that's not filled out. So wages, tips, and other compensation. So here's where we put the number of employees during that pay period. Total amount of federal taxable wages, so the amount that was subject to income tax, and then the amount of income tax that we withheld. Social Security wages. Oh, now see, this one's a little bit different. This one's for 2025. Let's see if we've got one for 2023 or 2024. They do change occasionally. Here we go. But they've got fewer, let's see. So some of those other additional items, those must have been, they may have been COVID related. So what I'm talking about here, sorry. Like they've got these qualified sick leave wages, qualified family leave wages. That's not listed on the form here. So it's changed slightly. Anyway, so federal income taxes withheld, taxable social. So let's just say we had 5 employees, and they each earned $10,000 for the quarter. So we would have $50,000. Let's say they had 10% withheld for income taxes, so $5,000. Social Security wages, we're not going to have any, we won't mess with, any pre-tax items like health insurance or anything like that. So same, 50,000. And Medicare wages and tips. Now we just do the math. Oops. So 6,200. Yeah, whoops, did that wrong. I did 1.45 too. Thinking too fast here. There we go, 1450. All right, and no additional Medicare tax or anything like that. So total Social Security and Medicare tax, add columns 2 from lines 5A, B, C, and D. By the way, these forms always will tell you what the math is there, okay? So 6,200, so 7,650. Nothing here. Total taxes before adjustments. Add lines 3, 5E, and 5F. Well, there's 3. There's 5E. We've got nothing in 5F, so we're just going to add these 2 together. So 12,650 is our tax. Now, here's the weird part. This adjustment for fractions of cents. Something weird happens because we're using percentages. When you calculate Social Security and Medicare tax on an individual basis and on an individual pay period, which is what we do when we withhold, right? We're calculating it each pay period. Sometimes we're going to come up with a different number than when we combine all of the wages together and calculate it for the entire quarter. Because on an individual, and you're going to have this in your problems, by the way. You're going to encounter this on the 941 problem. And this is one of those areas where, like I said, a lot of students have struggled with this concept of adjustment for fractions of cents. Essentially what it is just a rounding issue. And it's correcting for that rounding issue. For example, let me see if I can think of I don't know if it's going to work out right, but let's say we have 1 employee and they earn $1,262 taxable every 2 weeks. Now let's do twice a month. That's easier. So semi-monthly. All right. So $1,262 on a per pay basis. We think the Social Security and the Medicare tax. We do the calculation. I hope this is going to work. So the employers, that's good. So 78, so let's look at, 78.24 for the employee and 78.24 for the employer for Social Security tax, every pay. 1262 times 0.0145, 1830 for the employer and 1830 for the employee. Okay, so this is 1 pay period. And they're paid twice a month. So if we look at, so if they were paid 6 times, right, 3 months, so 6 times, this is the amount that would be withheld. So 7824 and 7824 so a total of 156.48 per pay for Social Security tax, and 1830 3660 per pay for Medicare tax. So in total, 193.08 times 6 pays, right, for the whole pay period, or for the whole quarter, 1158.48. I get that right? For quarter. All right. When we go to do the 941, we're going to take their total pay, 1262 times 6 pays. So that would be, we would take the, 7572. That would go here and here. And then we multiply it out. 938.93. So we'll do this here. So these were our deposits. Okay, this is how much we deposited. 938.93. Oops. And 7572 times 0.029, 219.59. Whoops. Add those two together. $1158.52, perfect. We'll say this is 0. So total was 75.72. We had, I'll say we had no federal withholding. All right. So we calculated for the whole quarter 1158.52 when we combined all of those pays together. Okay? On an individual pay period basis, though, because it was rounded, remember we had some, it went out to three decimal points and we had to round it up. We actually deposited 1158.48. But according to this, we owed 1158.52. Now, the IRS is going to let us, they're not going to charge us the extra 4 cents. What they're going to let us do is adjust this for the fraction. So, negative 0.04, taxes after adjustments, 1158.48. So that this equals what our deposits are. This has to equal what your deposits are. So when you're doing your homework, what you're going to want to do is get to this point, stop, calculate what the deposits are. Put that down here. The difference between these two should be less than like 30 cents. Shouldn't be much of a difference, but it's all due to rounding. Okay, so you kind of have to do 2 calculations there. You do it on the form, and then you look at what the deposits are. You want me to get out of your way? And if it's just a small amount of difference, like I said, less than about 30 cents, it's due to rounding. And then, so what the IRS lets you do is just to make an adjustment on the form, rather than having to pay 4 cents. Okay? Because if it's more than, well, I suppose it could be up to $1, I suppose, but it shouldn't be that much. It would totally mess up your W-4s if you had to pay that extra 4 cents, though. Because imagine you have a bunch of employees. Now, who does that 4 cents go to? Who is that applied to? It's not applied to anybody. Like, it would mess up the whole system at the end of the year when you're reconciling between how much you paid on a quarterly basis and how much you paid to individuals. Okay? Like I said, that students struggle with that part. That fractions of cents is hard to conceptualize. But essentially, like I said, what the IRS is doing, yeah. So you would want, yes, you'll round it to the nearest penny. Yeah. Or follow the instructions on the problems. Be careful, because it might tell you to round to 3 places and then at the end round to 2 places. So follow their instructions there. But just know that, so the IRS lets you make that adjustment, that rounding adjustment. Does that make sense? Conceptually? Yes? Okay. So the rest of this, and that's, like I said, that's the hardest part. Now, this, page 2, part 2, they want to know about your deposit schedule. So if line 12 on this return, which is the total amount of tax that was due, is less than $2,500 on the return for the prior quarter, and for the prior quarter was, or the prior quarter was less than $2,500, and you didn't incur a $100,000 next day deposit obligation, what you can do is just check that box and you can make the payment with this form. That's that $2,500 option, or that quarterly option for making payments. Next one, if you are a monthly scheduled depositor, enter your tax liability for each month and total liability for the quarter. So this is how much you owed for each month. So that total amount you should know on a monthly basis, because you had to make a deposit every month, right? What your amount is. If you are a semi-weekly depositor, or you had to make a $100,000 payment, then you've got a separate schedule, Schedule B, that has to be filled out. The Schedule B, I don't know if I've got a Schedule B attached here or not. Nope. Show what that looks like. I don't put the instructions on this. This is what the Schedule B looks like. Again, you put the EIN up here, the name, what year. So this is for multiple years, what quarter you're referring to here. You'll see that there are 3 months listed. They're not specific to which months, because this can pertain to any of the quarters, right? But there's space for 31 days. What's entered here is the amount of liability, not the date of deposit, but on the date that the liability was incurred. So again, if our what's today? Today is March 3rd. And if we have a payday today and we have a liability today, we're going to put it on the 3rd. We're not paying it today. Maybe we don't have to pay today is Monday, so maybe we don't have to pay till Friday. But we're going to put on the 3rd what we incurred today. So whatever the payday is, that's the date you're going to use on this form. Because the IRS already knows what day you deposited the money. They have that record, right? They want to know when did you incur the liability. This is what they use to determine whether or not there should be any penalty if you paid it late or if you paid it on time. Okay? So let's say you had like the 3rd and the, I don't know, 22nd of the month. If it's twice a month, then you'd have an amount there and an amount there, and then the total amount of liability that was owed over here. These, one for each month. Now, like I said, there's space for 31 because every month potentially has 31 days. Of course, for February, if this was the first quarter, we would end at the 28th, right? We don't have anything beyond that unless it's a leap year. And then the total liability for the quarter, all of those are added up and listed here. This total must equal line 12 on 941. It says the same thing for the monthly schedule depositors. Where are we? Total must equal line 12. Line 12 over here is our 1158.48. So this line 12 has to equal this, or if you're filling out a Schedule B, this. Let's see, how are we doing here? If you were, let's just say there was a difference between what you deposited and what you owed, usually this is going to equal, they should equal. But if there was a large difference, say $100 or something like that, then if your deposits were 105848, for some reason you messed up on $100, you owe $100, here's your balance due. So this is total deposits here, and then how much do you owe? You're going to send that in. If, however, you overpaid, let's say it was $12.58, it's not a balance due, it's a refund. Overpayment, $100, and then you can choose to apply it to the next return or to send a refund. I will tell you just from practice that sending a refund is much easier than applying it to the next return, because it just kind of messes up the whole accounting then for the next. It's a pain when you get these wrong. It's a real pain when they're incorrect. When you're off. But it doesn't happen very often. This is one of those areas. You know, when you do your tax return, your own personal tax return, it's the same concept, right? You're earning money throughout the year. If you have if you're an employee, you have amounts, income tax withheld. You're making your payments for taxes throughout the year. Businesses are doing the same thing. They're just making actual deposits, whereas for an employee, your employer is doing it on your behalf. Then at the end of the year, you have this reconciliation. It's called a 1040, where you reconcile what you actually owed. You do all the calculations for the taxes that you should have paid, that you owed. You compare it to what you did pay, and you either get a refund or you owe additional tax. This is the same type of thing. Although in this case, 9 times out of 10, you're not going to have a balance due, and you're not going to have an overpayment or an underpayment. It should come out exactly right. Whereas with the 1040s, usually it's very rare to actually come out exactly where you need to be. Okay? All right. That's the 941. Real quick, let me see if there was anything else on these slides that I wanted to talk about. I think this was all 941. And this was just going through the different lines that I already went through. So you can, if you made an error on a previously filed 941, you can file what's called a 941X. Anything with an X behind it at the IRS means it's an amended return. So a 1040X means you're amending, you're correcting a previous return. They've got those for 941s as well. Lots of penalties for not filing the report on time, not paying the taxes on time, not paying the taxes in full, and they pile them on top of each other as well, the penalties and the interest. That's it. All right, I know that was a little bit rushed. If we're here together on Wednesday, we have class on Wednesday. It's just that the weather, once again, is threatening on Wednesday. Who knows?
The weather's just like,
It doesn't like Wednesdays for some reason. Wednesdays are an issue, but we'll keep our fingers crossed that